Good afternoon, everybody. Welcome to our webcast on selecting an option strategy. Last week when we met together, it was the day right after the election, and we were talking about how bullish we were based on what we were seeing in the markets. Well, we're going to follow up on that a little bit. We had a couple of trades that just exploded in the best of ways that we're going to take a look at. Also going to see where might we be headed to right now based on what the market is doing, discuss what kind of strategies might fit best. I am joined in the chat by Barb Armstrong. I'm glad Barb's here. She's going to help me answer questions, maybe some that I can't quite get to. She'll help me out with, but as you have questions about our topic, what's going on, feel free to put your question in the chat. I'll try to keep track of it as well and get your questions answered. Now, I hope you're following us on X. I'm Connie Hills, CS. Barb is Barb Armstrong, CS. Would love to have you follow us. We put informational and educational information out quite a bit throughout the day. And you get little nuggets fed to you along the way. It's free, obviously, to follow us, and you get some little tidbits on the market. So I'm going to encourage you to make sure you follow as many of us coaches as you possibly can. Now, let's go through some disclosures. We'll lay out our agenda and see where we're going to head today. Options carry a high level of risk and are not suitable for all investors. What we're talking about today is for educational and informational purposes only. Don't consider it a recommendation of any sort. We're going to be using the Paper Money software application. It's for educational purposes only. This is what you download to your computer. It allows you to practice different strategies, different rules in your paper account without doing damage to your live account because it has that live data coming into it. Investing involves risk, including the loss of principal. With long options, investors may lose 100% of the funds invested. Past performance of any security or strategy does not guarantee future results or success. Short options can be assigned at any time up to the expiration, regardless of the in-the-money amount. That's something that is a little bit different in our paper account than how the live market treats it. You can be so that's why you need to know it can be you can be assigned early anytime. Once you sell an option, that's a possibility. There's no guarantee that an execution of a stop order will be at or near the stop price. All right. Hope you are finding us in some live events and starting to put these on your calendar. We've got 3 that are coming up. These are how we're going to end the year here. We're going to be in Miami in a couple weeks, November 23rd. That's going to be a Saturday, so that's going to be a week next weekend, not this weekend. After that, December 6th and 7th in Orlando is going to be a 2-day workshop. First day will be technical analysis. Second day will be option strategies. And same thing as far as classes go, but we'll do those in Houston the next week, the 13th and 14th. So if you're near any of these areas, you will want to go and you will say, Connie, that was such a good idea that you sent me there. They're free. We're nice to you. We feed you. People typically really enjoy these events. Okay, so head on over. Well, what we typically do in this class is we want to look at what the market conditions are, right? We want to see what's going on because that is going to maybe guide us to different strategies that we might want to use. So we'll talk about what current market conditions are, maybe what strategies might be most appealing. We're going to be looking at a lot of examples here today. All right, let's do this. Let's not go there yet. Let's come out here. I would like to come to my Thinkorswim charts. We're going to look at SPX first. Let's maximize that. Let's just talk about what's been going on in the market. Now, when we were together last week, this is what the market looked like, right? Was this candle here had a major gap up and a big run after it, all right? Continuing to just kind of go up for a couple more days. And then we've had a little bit of what we just call consolidation. All that means is a little pulling back, a little bit of hesitation, maybe. It doesn't mean that the market's selling off by any means, although sometimes if it gets down a little bit lower, like say yesterday at one point, this was a big solid red candle. And so it might have felt like that. But then some of the bulls came in and pushed the price up. And so we have essentially something that, you know, some of you might look at as a bull flag pattern. Let's look what the NASDAQ looks like as well. We'll look at the NASDAQ, and we're going to look at the VIX. All right. NASDAQ, does that look pretty similar? Yeah, it does. We'd say maybe huge flagpole here, consolidating here. Some people might look at that as a breakout here of the flag. I would say it's still consolidating in the flag, personally. It looks like maybe it's consolidating sideways. Would want to see a little pop out of there to see what's going on with it. Now, all the markets, last time I looked, were slightly up. Okay, so far these two have been. Let's look at the Dow Jones. Very similar pattern, isn't it? Big move and just this little consolidation. Dow's up right now, and let's look at the Russell 2000. It actually is one that was the biggest mover day after election day. The small cap stock index had a tremendous move here. So, not so surprising that it slowed down a little bit. But you can see none of them have retraced near where they started at that big gap up on Wednesday morning last week. All right. What has the volatility done? Let's take a look at our VIX. This is just kind of the close in. Let's look at a 1-year chart on this, because it gives us some perspective of what's really high, what's really low on the VIX. Now, remember, this is our volatility index that kind of tracks the put-call ratio. And if there's a lot more put buying going on, that would indicate the market's a little bit more fearful. It's seeking for some protection, right? If it's buying long puts. And so we can see, the best part earlier in the year, maybe down here about 12, 13, 14, maybe 16. Okay, pretty low ranges. We had this one enormous spike that was on August 5th when things were going on, I'm going to say globally, that caused a little bit of a scare and a changeover in some trading. It didn't last very long. So we're back here in really low area. And today, or right this minute, we're sitting at 13.88, which is kind of down in the slow range. So when we see something like that, we're like, okay, volatility is pretty low. That means option premiums, generally speaking, are not going to be as expensive as they are when it's up here in higher levels, say around 23, 24. We're not seeing anything close to this, like after this big spike, okay? So we would say maybe the highs up here, 23, 24. That's when the market's being a little bit more hesitant, a little bit more fearful. Now, let me take a quick look at the chat. I think we're doing pretty good right here. TM says, a little disappointed with the Russell 2000, just gave back the gain, but it is hitting support. One thing on the Russell 2000 we'll just take a quick look at, and that is when we see big, tall candles, like we had this day after Elections Day, okay? Many times the midpoint of that candle will act as support. And so sometimes traders might come in here and just kind of eyeball it, see where they think the middle looks like, and then just kind of have that in mind that, if it does retrace, if it does pull back a little bit, maybe that midpoint of the candle will hold. And so, yeah, it might be a little bit disappointing what it's done the last couple of days, because these days, what did I hear somebody say? I was watching basketball and they were saying his hair's on fire. Like he is so aggressive and moving and stuff like that. It's like, yeah, so its hair was on fire, I would say, here with the Russell 2000. And now hair's not so much on fire. Just kind of a little pull back. Doesn't mean necessarily that anything's wrong. Now let's go back and say, okay, volatility is low. We're seeing bullishness overall through the markets, seeing a little bit of a pullback, a little bit of flag pattern looking. When we look at our strategies, we might say, oh, well, this is maybe what we might consider doing more based on those conditions. So we could have some stocks that maybe are looking a little bit more neutral, but really by and large, for what we're seeing right now, I wouldn't be surprised if a lot of you were focusing on these bullish strategies. Couple that we're going to follow up on were based on basically a synthetic stock position, which is incredibly bullish. We sold a put and bought a call, and we've got a couple of stocks that just have exploded, maybe well beyond anything we thought they might do. Okay, so it's time for us to manage those. Then we're going to get into some new trades here. All right. Let's jump back here. And let's come over to our monitor tab. And we've got 2 positions here that are left in our class. Some of them closed up while we were trading. One of these I took action on today. Okay. It had made a really big move. We have, what's the name? Rocket Lab, I think is the name of this stock, RKLB. And we don't really see what the trade is anymore because I got out of it earlier. We're going to look at the chart. We'll show you why we got out of it. RKLB. We got out of it because we had extreme, man, it popped on its earnings. I haven't listened to the call. I haven't read up on the news on it, but apparently the market liked what they had to see. And even with this pulling back right here, right, it was up this high, and then it started to fade. It's still up 36%. So it's nice when the market gives you a gift, isn't it? Man, we love it. We don't expect it. We're happy about it, but we've got to capitalize on it. Okay. And so earlier today, when this was starting to fade, it looked like, yeah, we probably should take our profits on that particular position. So I'll go over to the monitor tab in our account statement. We'll bring up our Rocket Lab here, and I'm just going to go about 30 days. I don't want quite that many days up. Let's just kind of go 30 here, see if that changes anything. Basically, we did a synthetic, like I said, on when? We did, this is a different trade as let's see. No, maybe we did it back on October 16th. Let's see, where's October 16th? There's the 23rd, there was the 16th. So we did actually a couple trades here. Let's go back here. And so we had what? On this, we bought the long call, the 10. The one we were working with more recently, actually, I think is going to be this 12 and 13, because that's the one that I closed out. Okay, so 11/6, day after the election, we did the same thing here. We sold a put, we bought a call. Okay, the put that we sold, we brought in a premium of about $1.07, and then earlier today, we went and bought it back for 14 cents. So we really were able to maximize that quite well. The long call, we bought for $1.43, we sold it for $8.20. Okay, so the percent gain on this was just so enormous. Okay, this is not really that common. It's nice when it happens and you're happy that the market gives you a gift. But don't expect that to be happening all the time. Okay, before I closed it out, I should have taken a screenshot. I didn't. The percentages were like 2,000+% gain on the total of the two. Okay, most of that coming obviously from this long call that we bought for $1.43, sold for $8.20. Now the other one we need to take a look at is Tesla. So let's just come over here and see what we've got going on Tesla. It has 16 days before it expires. We got into this one on October 30th. So say a week before the elections is when we got in this. Just for potential, setup that we saw. Again, we were talking about synthetics and looking for a good move on it. Again, we never know if it's going to move, if it's going to be one that pops for us, or if it's one that's a dud, right? We don't really know what's going on. Tesla, of course, was getting love from the marketplace as far as after the election was over, huge move. We'll look at the chart here in a minute. Here, our short put is, we brought in 77 cents, and it is now worth 31 cents. So we're up a decent amount on that put. But look at this call. Okay, this is where quite a bit of gain came in here. This was an expensive call. We paid $16.85, and it is now worth $70.50. Now, there could have been several places along the way, quite honestly, with Tesla that you could have decided to get out of the trade. I mean, obviously, we're still up really healthy, 2,304% or whatever, but it was up higher earlier in the week. Okay, so last week I did notice it. Okay, I took notice of it, and last week We got in it because of that ascending triangle. Let me back up here. We had a really big target on it, and we got in, what do we say? It was, looks like I've got my little cursor right here, or green oval here on the day that we got in. Had the breakout of the ascending triangle. And so we said, well, how high is the height of the triangle? Let's give it a measuring stick. So we did. We put it on here, not really expecting it to go there immediately, but it did. Okay, so pop, 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 pop here. Here's a giant flagpole. And then the last 2 days it's been flagging. So when I say we could have got out earlier in the week, we certainly could have, and it would have been a lot more profitable. Okay, so when you get a gift from the market and you see it, consider doing things like we did with Rocket Labs, right? Oh, it's starting to fade. Okay, let's take our money. Let's not be greedy and expect a whole lot more, even though it was a December contract. I think it was December 20. Okay, this one, we're 16 days out. It has performed marvelous for us. We should do what? If you say, let it run, Connie, then I'm going to say, reconsider. Okay, we need to take profits on it. I could have done it earlier, but I was like, it's seen a pretty good move. Let's just see what happens. If you want to see how high it really got, go to ThinkBack and look at the closing price 2 days ago on the 11th. And that they were, both of those strike prices were more profitable than they are right now. Let's see here. TM's like, oh, you missed the class when we talked about Tesla. That's okay, TM. Actually, TM's my kernel TM. At least you got in on the derivatives. It's an expensive stock, and that might have been how some people chose to play it, right? Is really looking at the options. Let's look at, what is Isaiah asking here? Isaiah. This is a fantastic question. Barb gave you a nice answer in here as well, Isaiah. Isaiah said, what technical tool to use to gauge when the top is to take profits, right? We could use envelopes. He said, envelopes possibly. That is a possibility. What we looked at here today really was the candles. Okay, let's go back here to let's see. RKLB. I think I mistyped that here. Okay, we see a stock that's just kind of been going sideways. This is actually one that started to come up recently in my early morning mover scan. I haven't done so today because I've been buried, but my early morning mover scan, sometimes these stocks will come up and they come on the radar because they are moving well over the last month, over the last 3 months, and then on the given day that we're looking at it. Okay, it doesn't mean they're primed for entry, but it does mean they, are on there. Anyway, that's how it came on the radar for our class. In any case, let's talk about this candle. A huge gap up, and then it ran, and then when you see this shadow starting to form, that's telling you that the momentum is draining out. So you're watching the candle really tight. Now, some of you, if you have the ability, you might just kind of watch it from here that it's fading. You could go back and see if there are any previous support levels in the past that maybe this stock just gapped up and through that might show as support. Okay, that can be one way to evaluate it. Some people might even go down to a really short-term chart, whether say it's a 5-day, 5-minute, but you're really just focusing on today, right? Where you see this is what happened overnight, this gray area. And then this morning, it looks like it popped a little bit more and ran. And then what has it kind of been doing the rest of the day? Yeah, we're seeing the price just pull back. And so that gives you the idea that, okay, it made a nice move. It could continue, but for the moment, when we get those long shadows, that's letting us know that there's weakness moving in, okay? So that's why you want to really pay attention to what's going on with the current day's candle. Now, say this gapped up and it was staying high up here, all right? Then you might go, well, it's not fading. maybe you decide to put on a trailing stop loss. You say, I'm not going to hit the exit button because maybe it could go more, because maybe it could. We'll see tomorrow, right? But that when you have a good gain, a lot of people like to do something to try to lock in those profits. Okay, I hope that helps, Isaiah. Fantastic question, and I know probably you're not the only one that's had that question. Respect your hustle. Can you explain the characteristics of the candles beyond what we just did talk about? Beyond, like, say, this long, tall shadow here that's given us the idea that this thing is basically fading off of its highs. It's still up here really high, and if somebody were trading this and they're like, hey, I think there's more in it, and they have time they've got an option trade that they're doing, or they're holding the stock, then they might do the same thing here. The bottom of the gap should act as support. It doesn't mean it will. We can see in the next few days if it really does it, because sometimes gaps are filled, and that's why some people do get concerned when there's a really large gap, is they think, oh, at some point maybe it needs to fill, maybe the stock needs to drop down in there, recover. All gaps are not filled, and not all gaps have to be filled, but they can be filled. Okay, it's kind of our technical analysis. Marbiat says, can you incorporate market maker moves and how to use to our advantage? Yes, if we don't have any that are doing earnings today, but that's when I typically do talk about using the market maker move, because just kind of in a nutshell, whatever the market maker move is here, that's the expectation that the market's priced in for the move, for the event. Now, it doesn't have to just be earnings. It could be they're maybe having product announcements. Maybe they're having an FDA ruling that's due. If, a company's going to have approval for a particular stage of their drug, or particular approval for being able to get through the trials and market the drug. Okay, and those types of big news stories. And so the idea here is it could go either way, plus or minus, whatever this is. This actually, because the earnings were either yesterday or this morning, I think they were last night. Yeah, they were last night. The market maker move probably was quite large yesterday, whereas today, most of that move has probably taken place. It could have gone beyond the move even. All right. What's the difference between, say, this move, 180, and this first series of options that are due to expire in 2 days on Friday? This says $2.30 plus or minus. That's the expected move remaining until the options expire on Friday. Okay, so that is what the difference is between those two. Now, I want to get to some new trades, although, would you look at that? We've got a survey out there. You guys, many of you are familiar with us with these surveys. We, as coaches, we really appreciate it when you fill them out for us. We do, don't we, Barb? We appreciate it quite a bit. We read every comment you write. Our managers read every comment you write. And it's really easy, and I like easy surveys, okay? I'm a better participant when they're easy. Okay, there's 2 questions. You just fill in the radio button, plop, plop, on a scale of 1 to 10. 1 is you don't like it, 10 is I love it. Okay, just rate it on there. And then there's 2 places if you would like to answer the questions. Absolutely feel free to do so. I also encourage you to use it as space to communicate something to me. For example, if you said, how do you use that market maker move? Or in one of our classes, could you talk about X, because that's something maybe I'm struggling with, okay? Feel free to communicate that information. I like to incorporate your questions, your concerns into our lessons, okay? So use that space for that. So Barb, thank you for posting that out there a couple of times so these folks can do that. Now let's take a look at maybe what some opportunities are. We looked at the VIX, it's low. We looked at the markets, they're kind of flagging. When markets are flagging, we have a tendency to see flags in individual stocks, okay? If you don't see it on, say, the S&P 500 or the NASDAQ, then you're not as likely to see a ton of flags, but they're easier to spot when the whole market's doing it, because that means a lot of stocks are. So first one that we're going to take a look at today, probably a little stock you've heard of, Amazon. All right, they're through their earnings. They Market liked whatever they had to say. They gapped up at earnings, and then we've got what? We've got a nice tall flagpole here. A straight vertical move up is what we're looking for. We're not looking for little gradual moves in there, okay? But just like really clean flagpoles are just pop, 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 okay? Might go 3 days, might go 2 days, could go 10 days. There's no number of days it has to do. And then we look for this consolidation, okay? This consolidation, 2 to 5 days is the ideal, but sometimes it goes on, drags on a little bit longer. We look for it to not go more than 2/3 or 3/4 of the way back down the flagpole as it's retracing. So for example, on this guy, you know, we wouldn't want to see it come clear down here to the beginning of the flagpole, okay? That would just mean it's a retracement. It's not a consolidating price pattern. And look what it's doing today. It's breaking out on that flag. Now, how many of you guys like to trade flag patterns? Go ahead and answer me in the chat. How many of you like to trade flag patterns? All right. While you answer that, I'm going to go build in where somebody could use that target here. We're going to duplicate the flagpole. We're going to grab it, and we could place it in 1 or 2 spots. We could place it here, kind of at the bottom part of the flag consolidation area, wherever it is, if it's an angle or if it's flat. Or we could place it just at where we think it breaks out, where our eye sees it. That's what we're going to do on this one. It's going to be a little bit more aggressive. All right, lots of you. Scott, Riceford, Mo, Larry, Bob, Melissa. Yeah, you guys are liking flags. When your eyes get trained to see them, it's amazing how often you'll see them. And again, if the NASDAQ and the S&P are flagging, great. It's a great time to go searching for flags. All right, so we have a breakout here. Now our target here should be, let's see if this measured out pretty much what I thought. Okay, 225, 225.25. We could maybe take a little bit off of that. Let's put our target here at 225. We won't look for the change. All right, where would our stop go? If the stock breaks down, if it retraces its way and it comes back in this consolidating flag area, then we say, the pattern's broken, it's not following through. We would want to shut the trade down if it's a short-term trade for you, or if it's a swing trade for you. If somebody's trading this, they're like, I like Amazon, I'm going to stay in Amazon for a long time, then they might not really care so much about this flag pattern. They might go, oh, that's interesting, maybe it'll go there. But they're not necessarily planning to use it as entries and exits. All right. So we've got 225 here. I would say maybe our stop in this case would be in the neighborhood. I had it about 205-ish. Let's go 205. Let's go 205.70. Okay. That's going to be our stop. I didn't put that this was our target. Let me go stick a T there for any of you that are maybe trying to take some notes. Okay. All right, should we go do it? Sure. What are we going to trade? Now that's the next question. It's an options class. We could, if we wanted to, we could take a kind of an approach of maybe being a little bit less conservative, maybe do a short put vertical. Maybe somebody, if they haven't bought into the stock and they wanted to, maybe they want to sell a put. We'll see what volatility looks like. We're through earnings, so it's kind of probably come down from where it was initially. Or some people might say, well, this is a decent sized target. I want to maybe place something more directional. Short put vertical is typically saying, hey, maybe we want it to stay above 204 or 200 or something, versus saying, hey, we think this thing can move. By showing the flag pattern, our interpretation of that is, hey, we think the stock wants to move, so let's use a strategy that we can take advantage of that directional movement. Okay, so we're going to come over here to the trade tab. I'm going to collapse these columns here. We can see out here, implied volatility actually is pretty subdued from where it was when they went through earnings, right? So that means what? Means buying options aren't going to be so pricey. that can be nice for somebody when you're buying options, right? Be nice if they went up a little bit later, but what we're going to do here, we're going to just do, we're going to do a long haul vertical with the idea that it's maybe going to go up to that area. What we're going to do in our class, we could look at all these contracts out here. I'm just look here. I'm just a little curious if there's enough liquidity in something a little shorter, say 23 days. Look at this liquidity. Here's our open interest. Here's our volume. Oh yeah, there's oodles of contracts out there. We love to see oodles. Okay, so let's do an oodles. We're going to do a 210, 215. Let's start out there at least. Price of the stock's at 213 right now. So we would be risking 275 to make 225. Now, some people would be okay with that. Some people might say, well, if I'm going to go directional, I'd actually like to shoot for something, maybe a higher return, but let's see what it would be. If we have, I'm going to lock the price in here, 2.25. And our max theoretical loss here is going to be 275. That's about an 81% return if it went all the way to its max. Okay, so you're like, okay, maybe not so bad, right? For a trade where it only has about 23 days till options expiration. When doing spreads, there's a lot of different time frames you can use, but many traders kind of might initially just look for being able to buy or sell between 20 to 40 days. Sometimes it might have to extend out to 50 days. Maybe a stock isn't very liquid in its weeklies, or maybe it doesn't even have weeklies, okay? But some people like to really target that, which is why I said, hey, let's see if there's enough out here for the December 6th. That's what we're going to use. On our net debit, we're willing to risk $750 per trade, which means we can only do 2 contracts here, and that's all right. We're going to put in a first trigger sequential. We're only going to put in an exit for if it goes our way. If it doesn't go our way, we're going to be watching it to see if maybe it closes inside that flag. We may have to exit ourselves manually on that and cancel the order that's in there. So we're going to create an opposite order here. And if our max theoretical gain is 225, what if we could get, say, 70% of that? Okay, so 225. We'll say times 0.7 is about 157. Let's come down here. So 1.57, let's add that to our current price of our 275. That's the incremental amount we would like the stock to get to, so we'll say great. If it gets up to 432, that's about 70%. And let's have it buy us out. Let's make it good till canceled. What if you're watching this and say the credit gets up to maybe say 420? Could you go in and put yourself in there and take the profits? You certainly could, especially if it was within a short period of time. Okay, nobody has to wait for this per se, but we're going to have something in there that's a kind of a placekeeper for us, so that if it moves that direction, that it'll go ahead and execute for us. Okay, so we've got 2 contracts on the line here. Send it on in. We're going to put it in our option strategies bucket. And we'll follow up on it. So a flag pattern. Trader Jane says, wow, before Connie put in the trade, I put that exact trade in my real account. You must be learning something. You're learning what a long vertical is. You're maybe learning the flag pattern. Way to go, Trader Jane. It's awesome to let you know. It looks like Barb is able to answer all your questions. Thank you so much, Barb. Okay, next one up. Next one up. Guess what? We've got another flag. And I'll also tell you where I went shopping. I was looking at which sectors were performing the best more recently. Okay, do you guys know how to do that kind of an exercise? I'm going to open up this watch list. Don't worry so much about what's on the watch list. It's kind of what is in the columns. And what I did is I put in just today's change, then I have a weekly change, then I have a monthly change, and that's all. So we're looking really short term. And so I said, well, you know, I did this with just the sectors initially, and it turned out consumer discretionary is the best performing sector in the last week. So that's why I kind of went hunting in the consumer discretionary. There's quite a few kind of retailing stocks that are coming up. Victoria's Secret, a retail stock. Look at that flagpole. Yeah, I've already drawn it in here. It is a pretty fine looking flagpole. Okay, our straight vertical move up. It flagged sideways for four days. It looked like it broke out here. It looked like it was breaking out here earlier when I put it on my list, not looking like it so much anymore. So on this one, we are going to make it conditional. Okay, only if the price breaks out, and we can see we've got a target here to about 43. I'm just going to come up here. Target equals 43. Our stop is going to be pretty tight. Okay, our stop is going to go about, what's that, about 34.89 is going to be our stop. But we're going to make it contingent. We're going to make it contingent that Victoria has to break out of the flag. It has to move. It has to move higher than where it moved. Oops, today. That's not how I wanted that to go. There we go. Have it back. Kind of scrunch that down because we can see it's got a pretty decent range. Now, as we come up to the options, it's not as widely traded as some things. Okay. 872, so less than 1 million traded today, which typically means maybe not as much in the options. Now, these Novembers expire in a couple days, probably not really looking to use those. If somebody wanted to, they could say, well, you know, maybe I just go long on it. Okay. If you wanted to just go long on it, maybe somebody might buy something like a 35 strike price because there's 440 contracts. This one, the 34, there's only 11 out there, right? So that's just a too small of a pool of contracts. And I'm a real stickler for paying attention to open interest and volume, okay? So if somebody said, well, maybe I want to go a little more conservative, but I still want to maybe do this time frame, you know, you could even come in here and say, do the 33 strike, okay? For our purposes today, that's what we're going to do. If somebody wanted a little bit more time, you might come out here and consider the Januaries. There's a lot of activity out here in the January options, okay? Nothing wrong with going there. But if it moved up pretty quick initially, that our expectation is that it hopefully will be a quick move. If it does that, we don't know if it'll actually do it, but we're expecting that it is. So we're going to be more conservative here. We're going to buy the 33. And let's see if we can get it at maybe like, say, the midpoint price, see if we can get it for, say, $5. Sometimes paper money is nice to you. Sometimes it's not. And then if we're willing to risk $500 in the trade, we can just do one contract. So we're going to put the target based on the price of the stock on this one. Okay. So we are going to do an OCO bracket order. So we'll do first triggers, OCO, so we can put in a target and a stop. So we'll create two opposite orders here, or even, let's do this, buy custom with OCO bracket, and then we'll just get rid of that first line and then let it do some creation for us. And I'm going to change that price back to $5. We'll see if we get filled. If we don't, I'll come out here and change it. And then these, we're going to make both market orders. One's going to act as our stop and one's going to act as our target. Okay, let's do this first one as our target. Okay, so we're going to base it not on the price of the option, but the price of the stock. If this gets greater than or equal to, we said 43. Now, if you don't want to be that aggressive on your target, you wouldn't have to. If you want to go 42, 42.50, you could do whatever you want. Okay. And let's actually, we didn't have to set it up that way. Let's go ahead and do it. Okay, so there's our target. This is going to be our stop. If it gets less than or equal to, actually my arrow might be wrong on the other one. We'll go back there. 34.89 is where we want to say take us out of the trade. Okay, so if it gets less than or equal to 34.89, let me make sure I have my arrow the right way here, guys. Greater than or equal to. Okay, I couldn't remember if I changed the arrow, but it looks like I did. Okay, that's our trade. That's what we're going to get a look at. Hopefully one of these orders will execute for us. Because if it breaks down and goes back into that flag, we don't want to be in the trade. We'll say, fine, take a little loss. This, where it has a 69 delta, gives us the idea that, you know, the probability of expiring in the money could be around, you know, 69%-ish, okay? If we use our probability OTM and subtract 100 from this, it kind of puts it at about, what, 60, okay? So maybe 60 to 69. All right, let's go ahead. We're going to put it in our class options. I'm going to send it on its way. All right, next up, I think we have time to squeeze one more in here, but I might fly a little fast on it, all right? Look at this guy. Let's look at deck. Oh, good. We got filled a little bit lower. Now, I'm going to show you maybe a little bit. Let's look at a one-year chart. And you can kind of see what's been going on here. Had kind of a peak up here near where it is. Okay. So some people might be a little concerned that maybe that is some resistance that it's into. Okay. It's definitely something to keep in mind. It was looking like earlier, it was looking like we have, let's get our trend line, a nice flagpole popping here, little consolidation, and then it was up here a little bit higher. Looked like it was a strong breakout. This is looking like a weaker breakout here. We're going to still go ahead with the trade, okay? Noting there are some things to think about. Even if we see a flag, we might not always pay attention to resistance right there. Now, you could if you wanted to, okay? But when you're trading the flag pattern, you're just trading the pattern. You're not trading all these other things of technical analysis. We're not bringing in studies. We're not bringing in all those other elements, okay? Because it's a continuation pattern, so we expect it to continue. So let's do our flagpole. We're going to duplicate it. We're going to, let's give it a little bit more conservative of a target. We're going to place it maybe about right there. Later, if it pulls down here or into the flag tomorrow, then we'd want to be out. Okay, so our stop's going to be there about 173.72. Okay, I'm going in 173.72. Get that out of there. There's our stop. And our target is going to be what? Our target based on this is going to be about 195. Same thing, we can base it on the price of the stock. We can base it on the price of the option. And what would our preferences be here? Now, we've got a lot of choices on FedEx, or on Decker here, okay? We could come out here to the Decembers. We've got, I'm going to say, decent open interest if we wanted to do a vertical. Now, we've got odd strike prices here, so they probably went through some sort of a merger or acquisition, which means some of these may have volume, some of them might not. Look at the 175. It has a lot more open interest here than, say, these odd numbers, okay? On this, we're just going to do a vertical. We're going to keep in mind the flag. If somebody wanted to just buy a long call on it, they could. But what we're going to do here is we're going to do 175. We're going to buy that. We're going to buy the vertical. But we're going to come down here and we're going to take the 180, okay, as our short leg. And let me try this again by vertical. And then we'll change this to 180. So actually very similar to our first trade. Risking around 270, 275 to make in the neighborhood of about 230, okay? You can see our stop and our target here. My time's up, but I'm going to, after our class is over, I'm going to go, that's what I'm going to put on this as far as a target and a stop, okay? And we'll see, maybe it gets there before we meet again next week. So these are a little bit more conservative trades. Maybe the market is going to consolidate a little bit. We don't really know, but we found some things that were breaking out, so we're going to try to take advantage of those. Let's come back here. All right, I'll remind you one more time to please fill out the survey. If you haven't subscribed to our YouTube channel yet, what are you waiting for? Just makes it easier for you to find our content. Go ahead and subscribe. And then you can see upcoming classes. You can do notifications if you want, so it'll let you know when our next class is on option strategies. All right, so nice thing for you to be able to do. So go ahead and make sure you subscribe. And really, we looked at market conditions, and it kind of led us to looking at maybe some directional strategies, some directional bullish strategies. Looked at a lot of examples, looked at a couple of home run type trades that we had in our account, but remember, that's not typical, okay? It happened to work out that way, but generally speaking, that's not typical. All right, you guys, coming up next is market and sector analysis. Mike Fairborn's going to lead that discussion. It's going to be right at the top of the hour. So appreciate your questions, your contributions here today. Thank you, Barb, for helping me with the questions. I think Barb was able to answer all of those. I'll look for your input on the survey of things that you would like to cover coming up. All right, we'll see you next week. Bye-bye.